Today there was a little hiccup on this fund. We can see there it just went down a little bit, almost flat. But check this out, guys. 5 days, look, has returned about 1.95. 1 month has returned about 10%. 6 months has returned about 30%. If we go year to date, has returned 28.95%. Let's go 1 year, has returned about 45.91%. If we go 5 years, it hasn't been out of 5 years, by the way. This is just at almost where it is going to be. It has returned about 68% past 5 years, but it hasn't been 5 years. I'm going to show you exactly how long this fund has been out. If we look at the max, so max, this is a max, has returned about 68%, but it hasn't been out for a long time. This is a great fund, and there are three main reasons why I picked this fund for a month of June as a fund to invest your money, and this is Roundhill Magnificent 7. We're going to see those three reasons, and we're going to see what invest in and when it came out to the market. So before we dive into this fund right now, just make sure, if you haven't subscribed, just make sure you subscribe to this channel so you don't miss this type of update. And if you like this content, as always, smash that like button. Now, MAG's Magnificent 7 ETF, just something to be aware, don't confuse this to YMAG. There's another fund is YMAG, which is YMAX Magnificent 7 ETFs. You know, the name can be almost similar, but they're different in nature, and I'm going to show you why this one is different than YMAX. YMAG, which is from Yalemax. This is from Roundhill, right? So invest, what does MAGs invest in, right? Invest in 7 tech stocks with Roundhill Magnificent 7 ETF. Focus on exposure to Magnificent 7 stocks, the leaders shaping the future and driving innovation in the tech sector, right? So now, overview of this fund, we can see here the Roundhill Magnificent 7 ETF offers equal weight exposures to the Magnificent 7 stocks: Alphabet, Amazon, Apple, Meta, Microsoft, nvda, and Tesla. MAGS is the first ever ETF to track the Magnificent 7 ETF. So why they say here, because remember there was a YMAX, right? So the difference between these MAGs and YMAX is that MAG, first, there are two main differences actually. MAGs is actually an ETF that tracks Magnificent 7, that invests in this ETF. I mean, it buys these 7 stocks right here. You can see them. It buys them and it tracks the performance of them. YMAG, in the contrary, is the fund that actually does kind of the same thing, but is more of a writing call option on now, and it pays a heavy dividend. It pays a lot of dividend. This one doesn't pay as much dividend, and we're going to see distribution from this fund. Why would you consider MAGs? So the main 3 compelling reason why you should consider buying this ETF, right, rather than actually buying individual stocks, because you can buy this on your own, right? But you have to understand right now, for example, nvda is almost over $1,000. So that's a lot of money, but they're not precise, right? So MAGs offer exposure to Magnificent 7 stocks. Okay, second reason is efficiency, right? Designing both for investors and trader in mind, MAG seeks to offer similar tax efficiency to a traditionally managed ETF. In simplicity, MAGs is rebalanced to equal weight on equally basis, right? Ensuring consistent exposure to the Magnificent 7 stock in a single ticker. So remember, simplicity is one, for me, is the most compelling selling points, to me or for me, because instead of you buying this one and you have to, for example, nvda is 1,000, 1,200. Amazon, you have to have at least 3,000. You have to have at least 5,000 now to buy this individually, right? Or maybe 3,000, right? Now, if you only have like 1,000, you can buy this one because we've seen the price. I showed the price was like, only $63, right? If we look at the price is only $42. So you can buy, even if you have $100, you can have exposure to the Magnificent 7. Now, fund details, right? Ticker symbol is MAGS. Prime exchange is the NASDAQ. We look at the expense ratio. It's only 0.29. So this is a pretty good, because most funds, or especially the funds that are more active, they're very expensive, right? The minimum is usually about 1%, but this is only 0.29 basis points, right? And asset under management right now is 330 million. Launch, which when he came to the market, he came on the April 11th 2023, and you can do option on this one. So if you're a trader, you want to buy options and sell options, you can do that. Management style, of course, is active. So for fund that is active, and the management fee is only 0.29, that's a pretty good actually. We look at the exposure. Exposure, I've already shown you. These are the stocks that invest in. Of course, is Nvidia. You can see here they are rebalanced, but Nvidia right now you can see is has gone up more than the rest, right? Because these two, meaning Nvidia and Alphabet and Apple and Amazon, I mean they have outperformed the rest. But sooner rather than later, they will rebalance this, and everybody should be, because there are seven of them, should be on equal weight as planned. So now we come to performance. I already showed you performance on that chart on this website here, because this is not really 100% updated as usual, right on around the money, but we can see it's almost 58%, right? So this is include the fees they already taken, but on the other website we've seen it 68, so there's a difference there. But because that one, the website didn't include the fee, but this includes some fee in it. But if all in all is more than 60% performance, just less than a year, because he came on April, right? Oh, April actually to now, that's been a year now. So within a year, you've made about 60% of your money. That's crazy. That's a good one. But now, remember I told you there's a difference between YMAG and MAGs. The difference is because that YMAG, it's more designed for passive income investors who are looking for monthly payment. This one doesn't pay. We can see the first of all, distribution is very distribution yield is not great, because this is designed as a growth fund, right? So we can see here distribution frequency annually. So they do pay every end of December, and in this example we can see the distribution that they paid was pay date was December 29, 2023, and then the next schedule pay date will be December 31st. So end of the year they pay once. So that's the difference, and then the yield is very little. But end of the day, you're gonna make way more money from this ETF just with your growth. Conclusion, guys: if you're an investor who is seeking to generate a monthly income and a little bit of a growth, then consider YMAG, which is from Yieldmax, which has exposure to the a Magnificent Seven, but also pays a massive dividend. And this is a fund right here. You can see YMAG. But if you're an investor who is looking for a little bit of income, but you want more of a growth, then this fund is for you, because it has returned about 60%. And I'm thinking Magnificent Seven, this stock will be doing great for going forward. So that's it. That's the main reason that I picked MAGS as a fund for you to look into for the month of June this year. And there you have it, guys. Till we meet again next video, just make sure you subscribe, and if you like this content, give me a like. Till we meet again. Bye bye.